Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to describe about Bank of India's term deposit, understanding premature withdrawal rules and TDS on term deposits. Introduction. Term deposits or fixed deposits are among the most trusted investment options for customers who prefer safety, stable returns, and assured maturity value. While investing in term deposits, it is very important for customers to understand the rules regarding premature withdrawal, penalties, exemptions, and tax deducted at source (TDS). Proper knowledge of these rules helps depositors avoid confusion and make better financial decisions during emergencies or financial planning. Premature withdrawal of deposits below rupees 5 lakhs. For term deposits below rupees 5 lakhs, the penalty structure depends upon the duration completed before withdrawal. If such deposits are prematurely withdrawn after completion of 12 months, no penalty is applicable. This provision gives relief to small depositors who may require funds after maintaining the deposit for a reasonable period. However, the deposit is withdrawn before completion of 12 months, a penalty of 0.50% is applicable on the interest rate. Therefore, customers should carefully assess their financial requirements before breaking the deposit within the first year. The mature withdrawal of deposits of rupees 5 lakhs and above. For term deposits of rupees 5 lakhs and above, the bank applies a penalty of 1% in case of premature withdrawal. Large deposits generally attract stricter penalty conditions because banks use such funds for longer term financial planning and liquidity management. Customers investing larger amounts should therefore plan their investment tenure carefully and maintain emergency funds separately to avoid premature closure whenever possible. Penalty on renewal for longer tenure. A special relaxation is available in cases where a customer prematurely closes an existing deposit for the purpose of renewing it into another deposit with a longer tenure than the remaining period of the original contract. In such situations, no premature withdrawal penalty is charged irrespective of the amount of the deposit. This provision encourages customers to continue long-term investments with the bank while also providing flexibility in financial planning. Penalty in case of death of depositor. Banks provide compassionate considerations in unfortunate situations involving the death of depositors. In such cases, no penalty is charged on premature withdrawal of the term deposit. This facility helps family members or nominees access funds without additional financial burden during emotionally difficult times. It is one of the important customer friendly provisions in deposit policies. Special exemptions for staffs on excess staff deposits. No premature withdrawal penalty is applicable on term deposits held by staff members, ex-staff employees, staff and ex-staff senior citizens, and spouses of deceased staff members, where the spouse is the first account holder. These benefits are generally provided as part of employee welfare and recognitions for long years of service associated with the institution. TDS on term deposits. As per income tax rules, TDS is applicable on earned from term deposits when the total interest exceeds the prescribed threshold limit. An important point many customers fail to understand is that TDS is calculated on the total interest earned by the customers across all deposits held in the bank as a whole. It is not calculated branch wise or deposit wise individually. This calculation also includes interest earned from recurring deposits. Therefore, even if individual deposits are small, combined interest income may still attract TDS deduction. Customers eligible for exemption under income tax rules may submit the applicable declaration forms as per prevailing regulations to avoid unnecessary deduction. Importance of understanding deposit terms. Customers often focus mainly on interest rates while opening term deposits, but understanding the associated terms and conditions is equally important. Premature withdrawal rules, penalty structures, renewal benefits, and taxation directly affect the final return received by the depositors. So, awareness about these rules helps in better financial planning, especially during emergencies or changing financial needs. Conclusion. Term deposits continue to remain one of the safest and most reliable savings instruments for individuals seeking stable returns and capital security. However, every depositor should clearly understand the rules related to premature withdrawal, penalties, and TDS applicability before investing. Proper awareness helps customers avoid unexpected deductions, plan liquidity requirements wisely, and maximize the benefits of their investments. Responsible financial planning combined with knowledge of banking regulations can ensure a smoother and more rewarding banking experiences. Disclaimer. This write-up is intended purely for general information and educational purposes. Deposit rules, penalty structures, TDS applicability, and banking policies may vary from bank to bank and are subject to change as per regulatory guidelines and income tax provisions. Customers are advised to verify the latest applicable rules with the respective bank branches or financial advisors before making an investment or withdrawal decisions. Thank you very much for your patience. Request for like, subscribe, and share.